How do you successfully obtain a business loan to buy a restaurant? Let's find out. As a restaurant seller, you might be asking yourself, why would you have to concern yourself with restaurant business loans? The short answer is no loan, no sale. It's absolutely to your advantage to work through what financing options can be made available to a prospective buyer for your restaurant. Ideally, you want to get your restaurant business pre-approved for a restaurant business loan by the Small Business Administration, also known as SBA. Other options for financing the purchase of restaurants include seller financing, online business loans, retirement rollover loans, unsecured commercial loans, home equity line of credit. Let's talk about SBA loans. The U.S. Small Business Administration loan is the gold standard of business loans. The SBA does not loan directly to the borrowers. Instead, the SBA guarantees the loans to lenders, which both stimulates and encourages lenders to loan to business owners. SBA loans are granted from 75% to 85%, depending on the loan amount. This means that in the case of borrower's default, the lender has a lower risk. SBA business loans for restaurants include SBA 7A and SBA 504. SBA 7A loans are used to fund acquisitions for a 10-year term for business only and 25-year term for business with property. SBA 504 program is used if real estate is included in the purchase along with the business. Real estate in the purchase allows for lower monthly payments since debt service is longer and permits equity to build for a future sale. SBA also has a micro loan of up to $50,000, which is much easier to get than the 7A and 504. Specific terms vary by the lender. The maximum term, as dictated by the SBA, is 6 years. Most lenders will require a personal guarantee, a specific credit rating, and some form of collateral for loans under the microloan program. The rates are usually the lowest available compared to other types of loans. Rates can be either fixed or variable rates. SBA sets the prime rate and then lenders add on an additional amount for the profit. Borrowers need to be creditworthy and have relevant experience, preferably managing or owning a similar business as the target acquisition. Typically, buyers must inject cash in the amount of 20 to 25% of the purchase price on a 7A loan and 10 to 20% on 504 loan. The application process requires buyers to be conscientious and thorough in order to qualify. The lender will qualify both the business and the buyer and require documentation for key aspects of the business and financial performance. Consequently, the business must be able to show clean books and records with consistent earnings year over year. The lender will also require evaluation if the loan amount is over $250,000 and full appraisal if the real estate is included in the purchase price. If the restaurant is a franchise and on the SBA franchise registry, the SBA loans are pre-approved and the lending process is streamlined. Getting business loans for restaurants can be demanding, but the benefit to the buyer having an experienced lender put the business under a magnifying glass to identify misrepresentations and avoid unwelcome surprises. Next option is seller financing. If an SBA loan is not an option, it may be possible to negotiate seller financing. Instead of receiving the full purchase amount, the seller may be willing to finance all or part of the purchase price. In this scenario, the buyer and seller negotiate the terms and interest rate of the loan. Typically, sellers want to get paid out on the note within 5 years of the sale. Seller will collateralize the assets of the business for the loan via UCC filing along with the buyer's personal guarantee. Benefits for sellers to carry financing includes that the seller will be more supportive of the business and buyer to assure repayment. The seller also makes more on the sale due to the added interest rate, despite making more on the sale by financing the loan since the proceeds are amortized. Seller's tax consequences are reduced since their gain on the sale is meted out over a period of years rather than all at once. Online business loans. Online lenders help prospective buyers by providing a competitive financing through online matching platforms. These platforms connect borrowers with the lenders, participating banks, and specialty finance companies. Lenders benefit by being presented with only those loan requests that fit their lending profile, dramatically lowering their time and cost of origination. Borrowers fill out an initial form indicating the amount sought, FICO score, whether the buyer has collateral, and then the information is forwarded to matching lenders who make their efforts to the borrower. Next one. Other option is retirement rollover loans. Some borrowers with retirement accounts can borrow against their 401k plan. This equity financing can be an excellent option to minimize debt, particularly for a low-risk business investment. The funds from the retirement plan rollover are generally used in conjunction with the conventional business loans or SBA loans to acquire the target business. There is, of course, risk associated with investing your retirement assets into a new business. In addition, due to the technical requirements of the Internal Revenue Code, strict compliance is necessary in setting up the rollover and administering the plan. Failure to adhere to the rules could be extremely costly, subjecting the rollover funds to immediate tax, as well as a potential penalty for early withdrawal of retirement funds. For this reason, borrowers should only permit reputable financial services to handle their 401k rollover. Talk about unsecured commercial loans. Unsecured credit refers to loans or lines of credit where there is no collateral to back the loan. Borrowers might have to look at this option where they have poor credit and the seller is unwilling to finance. Although this type of lending is possible for acquiring a restaurant, it's considered risky for lenders. Borrowers' personal financial strength as well as the business cash flow needs to be strong in order to qualify for an unsecured line or loan. Without collateral, the lender will impose a much higher interest rate and a short term. These conditions make debt service more challenging. It is therefore important to hire an accountant and experienced business broker to perform due diligence to properly verify earnings so that the buyer is assured that there are sufficient funds to cover higher than average debt service as well as derive earnings. Home equity line of credit. Another option is for a borrower is to secure a home equity line of credit to finance the purchase of the business. This may be an easier option for a borrower with equity since these loans tend to be easier to obtain and cheaper than an SBA loan. Particularly if the SBA loan will require collateralizing the buyer's real estate anyway. If you're interested in selling your restaurant or you're looking for financing for a restaurant, Mission Peak Brokers can help. We are highly experienced and knowledgeable about restaurant business sales, financing. We have closed numerous eatery business sales in Bay Area and Southern California. We have represented restaurant owners and restaurant buyers for business loans for restaurants. In addition to business sales, we also provide commercial real estate sales and commercial real estate and business financing, including restaurant business sales. Contact us today for additional information. Thank you.